Wipro, that's also going to be top on our radar. So let's welcome on board the management and talk about how their future growth outlook is looking. We have with us Srini Pallia, the CEO, and Aparna Iyer, the CFO. Also, Saurabh Govil, the CHRO at Wipro. All three joining in on the show right now. Srini, if I could start with you, what is it that you would call the highlight for the second quarter, and how is it that you would rate the current demand environment?
First, when it comes to specifically on the quarter two, if you look at 3 of our 4 markets have actually sequentially grown, which is good news. In terms of sectors, we had 2 of them growing sequentially, 2 of them growing year on year, and of course we had manufacturing and energy and utilities, which has sequentially degrown. But in the context of the overall market, I see momentum picking up, especially in Americas for us, both Americas 1 and Americas 2, and also APMEA. Europe has been a little bit slow for us, and I think it's more in terms of what's going on in Europe as a geography, but also for us, we had some few client ramp downs, which actually also impacted for us in quarter 2. But overall, good pipeline, good momentum, and I think I need to thank my team for the great execution in quarter 2, and we'll continue to stay focused.
That sounds promising. Aparna, let me come to you. Why is the Q3 guidance opening a possibility of a decline? What kind of headwinds are you foreseeing?
So our guidance is always based on the visibility that we have at the start of the quarter. Our guidance, like Srini had mentioned, is impacted by furloughs, fewer working days, and softness in Europe. And if you look at some of the large deals that we won, they do take some time to ramp up. So overall, the momentum seems good. Quarter 3 is more a seasonality that we are seeing. And like Srini said, hopefully we will bounce back in Q4.
Right. So, Aparna, should we also brace ourselves for a decline in the margins because of seasonality or wage hike? And are the furloughs more than usual?
So, on margins, we've had a very, very good run over the last, 6 quarters. We've consistently improved our margins. In fact, as we closed Q2, our margin improvement year on year, 71 basis points, and this was delivered despite a very weak revenue environment. We are also very encouraged by our performance in Q2 because we also absorbed 1 month of salary increases. Now, as we look at Q3, yes, there are headwinds as we start the quarter, both in terms of furloughs, fewer working days, and 2 additional months of salary increases that we need to absorb. Yet, we remain confident of holding it in the narrow band. To your earlier question on whether the furloughs are more or less, for now, what we think and what we are seeing is it will be very similar to what it was last year. We'll obviously have to go through the quarter. A lot of this does depend on how we execute during the quarter. So for now, the assumption that we're going in with is that it will be similar to what it was last year.
Saurabh, let me get in your take. Attrition has inched up. Was that something that you were expecting? And more importantly, where is it that you see it stabilizing?
If you look at it the last 4 quarters, we have also, our attrition has been in a very, very narrow band on a trailing 12-month basis. Yeah, we had, in the previous quarters, we had very low attrition, so it's showing up here. But so far, we are very much under control. We believe it will be in a similar range in the coming quarters. We are close to it, but we also know that as markets open up, as the demand environment improves, we might see a certain upswing on attrition. But we are braced from a supply side. As you would have seen, we have done a hiring. We have taken a slight hit on our utilization, planning for the growth. So we are well covered to manage any growth environment. So we are comfortable from a supply and headcount standpoint.
Srini, large deals, they were quite impressive this quarter. What's the future pipeline looking like though?
So if you look at our pipeline today, I think it's a very healthy pipeline, and this is very secular across the 4 markets and also across the sectors that we talked about. Second part is the razor-sharp focus that we are bringing into each of the deals. We're trying to be a lot more proactive, understanding what the client's both business needs are, technology needs are, and we're bringing in a lot more Gen AI into the context of operational improvement, their customer experience, their employee experience, which together, put together, I think, we had a very good wins this quarter. I think $1.5 billion of large deals that we won, which is one of the highest in the last 10 quarters. And the focus and the momentum is what makes a big difference, and we're going to stay focused, and there's definitely deal momentum. In terms of the size of the deals, it varies. It varies from sector to sector, it varies from market to market, and sometimes the clients wants to do it in pieces, sometimes they want to do it end to end. It all depends on the economics and the way, how much of what the client wants to do. So it's a combination of both.
And Saurabh, is there any more backlog of the pending offers and the hiring targets for the years ahead?
So two things. One is on the freshers, we've started on campuses, it called out, and every quarter we'll be hiring or onboarding about between 2,500 to 3,000 freshers. By the end of Q3 this quarter, we would have cleared all our backlog of offers. So we have a very consistent way of moving forward. That's behind us. If you also look at a headcount, although it's small, but it's a positive trajectory over the last 2 quarters. And given the growth environment, given the heightened utilization which we are at, we see to be it in a positive trend.
Right. Srini, any changes to your capital allocation policy, and are you actively looking at a strategic acquisition after the success of Capco?
So maybe I'll take the first part of it. As far as specifically M&A is concerned, wherever it's a strategic advantage for growth, we'll go for it. I think we are definitely looking at the white spaces that we have, we're looking at the markets and the industries, and that will continue. In terms of the capital allocations, maybe Aparna, you want to comment?
Yeah, we've shared that we will be revising our capital allocation policy, and hopefully after our January board meeting, we'll be able to share more. We're going through our strategy plan for the next 2 to 3 years, and it'll just coincide with that.
And finally, Srini, any words specifically on BFSI and the US? Is it fair to now call a bottom?
At this point in time, based upon what we have seen in the last couple of quarters, BFSI, specifically in the US, we are seeing good momentum. And in Q2 itself, we have seen a growth coming in from BFSI. The second part of it is some of these deals that we have won, some of the opportunities that we are getting are consulting-led, leveraging Capco. So that also obviously reflects some of the discretionary spend that some of our clients are doing. So net, I think it's right now it's positive. I can't predict what is going to happen 6 months, 6 quarters from now. But as of now, from the vantage point I think we are seeing a good momentum in that sector.
Right. Srini, Aparna, Saurabh, thank you all of you for joining in today and highlighting, of course, how the quarter went by was and what's the visibility going forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.